Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, May 8th, just after the markets close. Well, U.S. equities rose again today following a better than expected April's jobs report and as traders eyed developments between the U.S. and Iran. All three major averages have finished the week higher as earnings continue to come in strong. Upbeat tech earnings have put the Nasdaq on pace to climb 4% on the week. The S&P 500 is up about 2% for its sixth consecutive winning week, while the Dow Jones has lagged with a week-to-date gain of just 0.2%. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. So today, we can see here that the SPY closed at $737.62 at yet another all-time high. The SPY is now trading 6% above the all-time highs set back here, set in January at 697. And the SPY is now trading at, still as it was last week, at a 3% premium to its red line, the 20-day moving average. That's pretty strong. Still trading at a 3% premium to the red line, the 20-day moving average, which is coming in here now at $713 and change. The 50-day, the green line down here, is coming in at 684 and change, and the 200-day moving average is coming in here at $673 and change. Now, we know, you can't see it on this chart, but we know the SPY has climbed in a spectacular uptrend from last April a year ago, from last April's lows. It had a low last April. The SPY did at 400. Can't see it on the screen, at 481, and has been walking up the red line, its 20-day moving average, in a very strong uptrend from a year ago, April, and a very strong uptrend until it hit an all-time high in October at 600, right here at 690. So that was a 44% gain, which is amazing. So what we're actually looking at here is potentially the top of a very long and beautiful uptrend. You can't tell by this chart, but that's what we're looking at here. 44% gain from the prior April up to October. Then it got tired. Of course, profit taking comes always at some point, and fell on profit taking here in November down to 652. Then it regained energy, pushed back up through the moving averages, finally started walking along the 50-day, the green line, and walking pretty much on top of the red line. The 20-day here up to 697 in January and February. Then profit taking started coming in a little bit, still bullish, but not moving higher highs and higher lows like we want in an uptrend. So it started moving, trading in a range here from 676 up here again to 697. Excuse me, then rolled over and fell down on news of the Iran war, down to 629. That was the lows here at the end of March. Then it turned around on a dime, turned around immediately and started headed back up through the 20-day, the 200-day. I mean, this is an incredible up move with not even taking a breath and maybe a little one here, and then up to where we are today at $637 and change. I'm sorry, 737 and change. And this from the bottom here up to this high is a 17% rally, which is amazing. Now, I know I said it last week and the week before, but it is getting really a little toppy here, I believe. I'm pulling protective stops up as we go. But you know what? You never go broke taking a profit. So it's up to you. But we got to start getting a little more cautious here. The 14-day RSI you see down here, it was trading over 75 last week. It's even a little higher this week, a few cents more higher, but definitely means overbought, at least in the short term. Now we say, well, what do we do next week? What do we look at here in potential areas of support? We have no resistance here, obviously, because we're at all-time highs. There's no resistance here. We have potential price support down here. It's like this consolidation here somewhat. At 710, we've got 710 to say 713, where the 20-day moving average is right here. Then we can look down here to 697, those prior highs from earlier in the year. We have potential price support here down at the 50-day moving average at 684, and down here we can go on down to the 200-day moving average down to 673. So what was that? 684, yeah, and 673. So from there on down, so there is plenty of potential price support should the S&P need it. Now, next week on Monday, the CPI, Consumer Price Index, is coming out. That is important to the Fed, and also the core CPI. Again, that's coming out on Monday. On Tuesday, we have the PPI, which is the Producer Price Index on Tuesday. And we have a ton more earnings announcements, So please trade carefully. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market, including large cap momentum stocks like the Magnificent Seven, like Apple, Meta, Alphabet, that whole group. Now, the Qs today closed at $711.23. Again, at new all-time highs, closing right on that high, and 12% above the prior highs here that we had earlier in the year and last October. So we had these highs up here at the time. That was at 636, 637 trading along here. Those were the highs. So we're already 12% above those highs. My gosh. The Qs is trading at a very high premium here to its 20-day moving average. The 20-day is coming in here at $660 and change. The 50-day moving average here is coming in. The green line is coming in at $620.91. And the 200-day moving average, the black line's coming in at $607 and change. Now we know, and again you can't see it on this screen, but we know from, trying to draw an arrow here, we know that from last April, a year ago, we know that the Qs hit a low a year ago, April, down at 402. And from there, it rallied very strongly into an uptrend all the way up to, as I mentioned, the October high at 637 right up here. And that was, from those lows to that high, that was a 58% rally. Unbelievable. So from the highs at 637 here, it dropped on profit taking in November, as it would. Profit taking comes in at highs. Maybe not right now, but it used to. So profit taking dropped it down here to 585 in November. Then it rallied back up through the 50-day and the 20-day and kind of walked along those. A little more drama than the SPY used to walk along them, but consolidated along the 50 and the 20-day before dropping, and it couldn't go anymore. It hit 636 here at the very 1st of February, then dropped down to 594. Tried to rally up and get back up through this time, the 20-day and 50-day, but this time it couldn't do it. These moving averages can be very, very tough. They're great support when price is moving along on top of them, but when price falls through the moving average, these major moving averages, when it falls through these and tries to get back over, it just many times they just act as ceilings that price has a real tough time getting through. So tried to get back through the 2050, couldn't do it. And then finally fell on news of the Iran war, and we fell down here to this April low, down here, or March, it was actually March, this March low at 555. That was the low right down here. Then it made a quick, fast U-turn, rebounded, and flew in a very steep uptrend, up 28% from the lows to the highs of this move, back up to where we are now, of course, at 711 and change. Now, you say, what do we do with this next week? Well, there is no overhead resistance here. It closed on the highs of the day, 711.23. So we know there's no potential resistance above until some is made, until we get a pullback of some kind. So we say, well, where's the support? Potential support here we can say is at there's a little gap. There's a few gaps here. We can call this gap here at 680 potential support. Then we have it down here to 558, 560. We have a little couple of day consolidation here along with a 20-day moving average. Then we can look down to the 50-day at 620. Of course, we have these overhead, these 637, the all-time highs back then down to 620 for the 50-day moving average, then down 616 to 612 where these consolidations came in, and down to the 200-day at 607. So those are potential support areas should price start falling. So again, we have a ton of earnings coming out next week. We have the CPI and the PPI, and the CPI is one that the Fed really cares about. So please be careful. I know that I keep saying it's overbought and to be careful, but it is and it is. So please keep your protective stops where they need to be. Our final chart today is one we haven't looked at in a while, and I think it might be a good idea here. This is the ARK, the ARK, we can call it Space and Defense Innovation ETF. The ARKX is the symbol. It has 32 holdings. Top holdings include L3 Harris Technologies, Rocket Labs, Teradyne, AMD. Yeah, and it has tech stocks in it, AMD, Amazon, and Alphabet. You wouldn't have guessed it, right? And so we can see that you say, well, what about AI? AI is all the way through these holdings, so you'll definitely have some AI if you do, if this does well and you get into it. When I captured this chart today, the ARKX was trading at $34.19 just before the close. And it is above now the red line, the 20-day moving average, which is coming in at $33. We've got the 50-day coming in here at $31 and change, the green line. And the 200-day moving average is coming in here at $29.85. So we can call that 29 or 30. Now, it did make its all-time high here, its all-time high. It made it in January, this past January, at about $35. Now, if I looked at a long-term chart, as I always do of these, we know that the ETF came onto the market as a new ETF in June of 2021, and it came onto the market and at about 15, then it fell to 12 in July of 2022, then began its uptrend in July 24th, and it made a very strong uptrend with a, it moved back and forth, but on a monthly chart, it was a very strong uptrend. It had a couple of drops, but moved finally up to these all-time highs here in January at 35. Then, as we can see here, it gradually fell through February and March. It fell down here, down to 27 at this low here, then rebounded up here to 34, then pulled back to the 50-day moving average, used it as support, back to 31, and then bounced up again to where we are now at 34.19. So it did use this moving average as support. So I like the ARC X here. We can just, again, we can call it the ARC. I like it. Of course, there are no guarantees because the S&P and the Qs they're really, really, really overbought here. So I'm going to be careful with any entries, any new entries that I make, for sure. But if the market stays strong in the coming week, I will buy a small position of the ARC in my trading portfolio, and I'm going to put my initial stop down here just under the 50-day moving average at 31.50. If and when the ARC can climb up here above this all-time high, I'm going to call it 36. So if the ARC can trade up, well, there's 36. If the ARC can trade up above here and go over 36, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the ARC X in the coming week. I'm also telling you right now that at the moment I'm watching gold and silver again. I'm probably going to start nibbling on both of them in the coming week. I just want to get that back up. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Bottom Fish Like a Pro is the perfect training to check out right now. How to Bottom Fish Like a Pro. Because we have, of course, it looks like almost everything is at new all-time highs, but there's still some good entries there on the that could be good trading entries for bottom fishing. In this program, I show you exactly how to detect with high probability that a stock or an ETF is just about to reverse from a downtrend and move higher again. You'll learn how and when to buy, how to manage the trade, and when to take profits, which is important, especially now. Our new low price for this program is only $199, which you should make back pretty quickly, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular 7 Steps to Successful Trading, that's our flagship program, to how to swing trade successfully, definitely one of the most popular programs. Trade the trend to profits, how to read charts, great for novices or anybody who wants to brush up. 3 winning setups. These two are only $59 each. This one and this one, only $59. 3 winning setups, great for short-term traders. And again, how to bottom fish like a pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. So until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.